There's a term psychologists use called the red herring, the deliberate introduction of irrelevant information to pull attention from what actually matters. What's fascinating is how effective it is. We've seen it in movies, in politics, in dramas.
The more you think you see, the easier it'll be to fool you. My job? To take your attention and use it against you.
Because attention is finite, but when attention is captured, behavior follows. If you see the world today, there's a pattern that you can't unsee. The news is not designed to inform anymore, it's designed to provoke. Every headline is out there to trigger an emotion. There's different faces on the TV, different news channel, but the same script.
Un vrai truffeur ne fait pas la une de CNN, parce que si tu déranges vraiment, on ne parle pas de toi. Et pendant que tu restes distrait, la vraie menace se met en place. Le remplacement de la politique par l'algorithme.
And while everyone is getting angry, arguing about the headlines, picking sides, asking people to do more, I made 12% in a week. And along with a lot of other traders that are contrarian thinking like myself, we have picked up on this powerful volatility in the market and leveraged on it. So this 12% have helped me pass 2 funded accounts, which I will break down some of the trades I've taken in the later part of the video. But first, you need to understand why most people never even have a chance of winning in this game. Machiavelli said, "Don't play fair in a game where others cheat."
Machiavelli said, never play fair in a game where others cheat. Fairness isn't a virtue, it's a tool picked by whoever holds power. In real contests, rules aren't sacred, they're strategic. Whoever writes them wins them. Clinging to fair while others conspire isn't noble, it's volunteering as prey. To face treachery with naive honesty is to walk in unarmed.
And trading, this game was never fair. Most people are already losing the moment they step in, from the fees, the spreads, the rules that are designed to take from us, and institutions with capital so deep that they can sit through weeks of move that would destroy us. So no, this isn't just about being patient and being positive. It's about understanding the game you're actually in. So before we get into the nitty-gritty, here is an ad for FundedNext. FundedNext currently have the top amount of payouts with 4,209. This total payouts are 3.3 million. So one of the top in the entire prop firm match. I'm only trading futures, so as you can see, they also have 1,000 plus payouts with more than 1.5 million already paid. You can choose between CFDs or futures, and right now just looking at the rapid challenge. On 50k, the profit target is 3,000. So the 12% that I have made is enough to pass 2 of this 50,000 account. And the maximum loss limit is 2,000, which is 4% of the entire account. And you're even eligible for a 15% profit split during your challenge phase. So the thing about trading is that you don't need to gather massive amount of percentage. You just have to collect more capital. And with less percentage, you can make more. With less effort, you can make more. If you are serious about getting funded, I've left my link in the description below. Click on it and get started. Now let me show you why trading feels impossible for most people in the first place. The market isn't reacting to news like the way you think it is. It's an algorithm. Large orders can't just appear and disappear. Liquidity has to be engineered, so price have to move in a certain manner that allows all this size to enter and exit quietly. And once you see this, price stops being noise on the screen. It becomes a language. And this is what majority of ICT concepts are pointing towards. Not the indicators, not the signals, not the news, but the intent behind why price is moving the way that it does. And this knowledge isn't taught publicly for a reason. It requires you to think against the crowd, against the headlines, against what feels emotionally obvious. You have to be the contrarian over and over again 100 times. And once you see the market as an algorithm, you'll see that it runs on a predictable behavior. The same mechanism that's driving price is also driving the world outside of the charts. When you control attention, you control outcomes. And that's why attention itself has become a currency. So attention equals currency. Your attention is the payment. Brands would pay millions just to capture it. For example, all the branded shops that have presence in so many different malls across the world, but when you take a look around, you don't really see anyone buying anything. And you know that those rent spaces are probably costing a lot. In your point of view, it doesn't even make financial sense. So what brands do is that they will continue to make money from some other shops that are doing well, and then funneling it into this shop that is not doing as well, just to have brand presence in that area of the world, just to stay visible, just to have your eyeballs on it and you remembering that this brand exists. So this is not something that you can calculate with numbers anymore. Just know that the moment you give something your attention, you are making it real. And companies would pay millions and millions of dollars just to make themselves real. So of course the world feels loud. Everything is out there trying to capture your attention. That's why it's so hard to focus and traders keep sabotaging themselves. So every distraction costs energy, and energy is the real currency. So when you pull your attention back from the puppets, the news, the noise, put it all into one thing, the craft. Trading. Your execution becomes sharper, your risk is always controlled, and suddenly 12% a week is not crazy, it's logical. The next time when you look at your own P&L and compare it to someone else's, ask yourself honestly, in a day, where does your attention actually go? Is it going into your craft, into your execution, your refinement, studying price structure, the old trades, going back in time and seeing how you could have done better? Or is it leaking into noise that you can't control, like comparing what you're wearing to someone else, or the drama on the TV, or being anguished by things that are uncovering right now? Attention isn't neutral. It feeds and grows into the reality that you want to see. So whatever that you feed will grow, and whatever that you starve will disappear. If you keep giving your attention away and being triggered and reacting to everything that's out there, don't be surprised as to why you are not profiting in this beautiful market right now. But if you reclaim back all of your attention and your energy, your results will become consistent and predictable. So now I'm going to break down a few trade examples that I've taken during my 12% week. This is my Notion board with all the screenshots that I've taken so that it's way easier for me to show you guys the trades. This was taken last import on 29 Jan. Here we have the net P&L of 6,100, 54% trade win, 2% profit factor, 75% daily win, an average of 1.79. 1:1.79. Okay, so as you can see, I started off the month with a few losses and then came back to break even, and within 1 week hit about 12 to 13%. So as sexy as that 12% sounds, you never know what a person is facing before, and you just have to consistently, come off stronger so that you can end with a better month than when you first begin. And I'm glad that the people who are constantly, where can we see some proof, is already out of this video. They probably wouldn't even stay that long. So here is like the less meaty, less attractive part to know that, people actually go through losses. And I can be taking 9 trades and ending off with a break even, right? And then 1 trade to get almost 1:2R, and then here. So these trades are a compilation of me either taking partials, adding positions, etc. So on this trade breakdown, I'm going to give you the ideal trade setup, the ideal idea, without all of the advanced stuff, so that you know just to catch 1 or 2 trades is enough. But the breakdown of the idea is where I took my positions from. And these are the 2 days that I will be breaking down, 26 and 27. So here on 26, you can see that my first position was taken roughly 6:24 a.m. during London. And then it just ran higher for the remaining of the London session as well as the beginning of New York session. And then here, during the 10:15 macro, I also placed another position of continuation to pass the funded accounts. So usually I would just call it day over here, but I saw that it was just a bit more, so I took another few trades to pass it. So mainly what I want to show you guys is to spot the manipulation and then take the distribution. So in this case, we have the manipulation pushing downwards during London session, and then write out the distribution once you see that the manipulation has ended. So this is another screenshot on 26 Jan. You can see that there's so many trades, but I'm only going to touch on this one, which is the big run. So on H1 time frame, you can see that price was running higher throughout last Wednesday into Friday. From here, it ran higher into Friday, giving us an SMT, which pushed price down during the remaining of Friday. So during the open this week, the week of 26, price opened with the large new week opening gap. It has already broke above it, came back to retest, right at the opening, right at the daily open for both ES and NQ. So this to me is a sign that price is bullish when it closed above the new week opening gap and came back for a retest. So during this area, it was already considered bullish. So I entered at 620, stop loss underneath the new day opening gap because I do not want to see it coming back underneath even the opening price anymore. And then London continued to run higher into 9:30 a.m. New York opening into the previous day's high where the SMT is set. So when you're looking at market maker buy and sell model, this is one of the example. When you have one SMT that sparked the market maker sell model into the market maker buy model. So you can also notice that this candle, this long wick candle, has NQ closing with a red while ES closing with a green. And that to me is also a sign of divergence. So SMT to SMT. So on the minute 15 time frame, we can see a SMT on the lows between ES and Q versus YM. So marking out the inverted fair value gap over here, you can see how price is slowly chopping around. So fast drop on the left and then slow rise on the right. And this was where I entered. So on NQ, price chopped around all the way until 8:45 macro timing, where it gave this fair value gap before running higher, and then 9:30 giving another SMT over here and over here. And so the full target is the previous day's high, which was hit during the first macro of 9:50 to 10:10. So 9:55 a.m. is when it hit. And then the second entry that I got in was after 10 a.m. where it gave this next push with a nice fair value gap and a retracement. And the next target would be the new week opening gap. However, around here I was already passing my account, so I closed out the position and just watch how price played out after. So what you see is price actually started stalling throughout the entire PM session once its daily objective has been reached. So this was already the first objective, and this was an entire stretch. And what you can see is that the PM session actually came back to retest the previous day's high for a second time. And for ES, it reached higher before coming back to new week opening gap. So one more thing to take note is that price was just running back and forth throughout an entire hour from the previous macro to the next before it gave the next push. So sometimes when you see that the first objective is already reached for the first macro, you should just wait for the chop to play out before the next macro that ultimately gave this run into higher prices. Alright, so on 27 Jan, this was after 9:45 a.m. And even though there were a few trades, this is the one I am going to show you. So here's the entry and here's the exit. This one is the easiest, to catch. So there's a large Asia range and how London came in with consolidation. So you can see once again, we have this SMT at the top before the push down into discount prices. So we have large Asia range, accumulative London, and then manipulative New York before the run higher into distribution. So once again, we're just trying to spot the manipulation. Okay, so on the M15, this is how it looks like. We have an SMT coming into the market. Price dropped into a manipulative behavior. And along on NQ, we have it dropping into new week opening gap as well as previous day's high. And this gap that was created during Asia. So both of them actually reach into this fair value gap. And so my take profit is once again at where that market maker sell model begin. So this is where my market maker buy model would end, where the SMT is. So here we have the manipulation, like look at this large leg down. A lot of traders can be stopped out during this motion, so make sure not to catch a falling knife and wait for it to run higher, retest, before you enter a position. And what I really like about this rejection is that it moved away from the previous day's high as well as the new week opening gap right at the manipulation time for the 90-minute cycle in New York session. So push higher, retest, and this is where I got in. And here is my take profit. So note how price is also underneath the true day open, the opening price at 12 a.m. So when I'm looking for a bullish price move, I like to find price in the discount. And discount is underneath of 12 a.m. opening for bullish move. And for sells, I would then look for price above daily open. So from here, you can see my position at 9:45 a.m. I have the stop loss underneath of this intermediate term low that filled up the balance price range and is above the 50% of new week opening gap. Because once I see this manipulation ending, I do not want to see price coming back below this low anymore. And that is how I got the 4R, which makes up to 2,000 a trade on a 50K account. So to end off this little breakdown, the sign is to just look out for the manipulation, wait for it to end, and then take the retest into the nearest original consolidation for your market maker buy or sell model. Replay this video if you need to. You can see that I'm using the same thing for both of them. I'm always using the same setup, same models. And if you want to learn the exact method, I have my course linked in the description below. And this course is also free to anyone who wants to join my Skillfully Lucky retreat happening in April. And during the retreat, we will go through every day what we're expecting to see in the charts, as well as the review of all the trades taken on the next day. So remember, red herring isn't just the noise with the drama that's going on right now in the outside world. It's a cover. A lot of wealth is currently being repositioned, moving around behind the scenes. So now is the best time, more than ever, for you to pick up this skill to get a piece of the pie. Over the next few months, you're going to see a lot of traders that are making it big. Start putting your attention into things that matter, studying the charts, understanding this language. So I wish you the best of luck, and I hope to see you in my next video. Bye!